when we do this, okay, this is the one of the important chapters. Okay, this will be there for 12 to 15 marks. Understand point? This will be there for 12 to 15 marks. Okay, now more technical. Okay, very technical, not more technical, very technical. Here you are going, this is the way people will find difficult, but inshallah you will make it very good. Detailed syllabus objectives are provided. Okay, what we are doing, we are talking about the plan, why we need to plan, how to perform audit engagements, okay, with an attitude of professional skepticism and exercise a professional judgment. So many, see, in the first case only, what is the need of planning? Why we, what is the, how you have to perform the engagements, how you have to be professional skepticism and you should have a professional judgment. And you, how you are going, what is, how you will assess the audit risk. Okay, why, when you are going to an audit, how you will assess the thing? Is that, no, most importantly, before you go for any audit, you have to understand the entity, the company, its environment, its financial reporting framework. You have to take into consideration three things. The first one is entity, the second one is environment, the third one is its reporting. See, telecommunication is a different industry. Airline is a different industry. Automobile is a different industry. Okay, construction is a different industry. Okay, construction, you are going to specialize it. Okay, you are going to say banking is a different industry. Every industry is different. You are everywhere. The moment you join, after seniority, you will get a good understanding. But you will be specialized. Yes, you are specialized in airline industry. Okay, you are specialized in, likewise, there will be a space. Before you go for an audit, you should know which company I am doing, which industry it belongs, and which is the financial reporting. Because banking is a service industry. Concept is different. Automobile is a manufacturing industry. Is it manufacturing? You are talking about the retail industry, trading. Okay, the everything, there will be a separate concept is there. We will cover this. Okay, very slow, little bit. I will not say this, but it will be more specific one. You have the audit risk. You should have a professional skepticism. Always you should have a questioning mind. You should not doubt, but you should have a questioning mind. When you have a risk assessment and materiality. What do you mean by materiality now?
Significant.
Materiality is how it is influencing. Is that if you say that significance, okay, materiality is significant. What we are doing, we are going to say that it is going to be 10,000. If you take 10,000, 1%, if you take 1%, it comes to how much? 1,000. It is a material. 0.5%, it is going to be 500. It is a value. Is that? It is value. Means based on that. In some cases, you take 500. If you take 500, if you take 1%, it will become only 5. Means when you are working out with the things as such, you should be very clear that how we are going to work with the materiality. This word, I am telling you, this word will haunt us all through the time. When I am saying haunt us, you will become very active. Yes, there is something is there with materiality. Every other page, every other question, you will have the materiality. You should understand the entity, and when you understand the entity, you should make an analytical procedures. Always you have to make a comparison. What happened last year? What happened this year? in terms of materiality, in terms of risk assessment. Okay, you have analyzing the things. What happened last 3 months? What happened end of the year? We are comparing between 2 years. Either we are comparing between end of the year. Okay, end of the year. We will always make a comparison analysis. We will compare with respect to ratio analysis also. Okay, we compare with percentages also. Analysis, analytical, you are analyzing. Okay, now this is what it says. One of the main what is the auditor main requirement? You have to obtain sufficient appropriate evidence. Our task is you have to get the evidence. To what we are doing, we have reducing the audit risk. Acceptable low level. There is nothing like you are going to reduce the risk to zero. We are reducing risk to the acceptable low level. Which one we have covered this in terms of ISA 200. What is the objectives of independent auditor? In chapter number 2 we have done this. Now, in some cases, I will tell you simple things. I will tell you that we should memorize it. Means we have to see. I'm not saying very say. Here, memorizing means you can plus or minus, but you should not change entire thing. What is the audit risk? That's the most important thing. Understand? Is a risk auditor express an inappropriate opinion? You are expressing, you are not satisfied. Okay, you are not satisfied with the work. You are expressing inappropriate opinion with respect to what? With respect to the materially misstated. Something wrong has been done. Something wrong has been presented. Is it right? Something wrong has been presented. What is the audit risk? It is the expression of an inappropriate opinion about the financial statement materially misstated. You have materially misstated. You are not presented properly. Fine, that's all. Other things are you can have. Now you understand the way I am teaching. Okay, this means that it will give when it is express inappropriate opinion. Which type of opinion? This means that they give an unmodified opinion when the financial statements are materially misstated. Is that this means that, is it right? They give an unmodified audit opinion where the financial. Now, if this were to happen, what does it mean? The auditor, this means that they give an unmodified audit opinion when the financial statements are, means you know the mistakes. You know the mistakes, but what you are doing, you are not focusing on that. You are not giving an opinion on that. If this were to happen, the auditor could be sued by the intended users. If you know there are mistakes, again keep it in mind. If I am writing this, if auditor knows the mistakes, okay, the errors, okay, okay, if auditor knows the mistakes, okay, and in spite of that, he is giving an opinion like true and fair. Okay, true and fair. Little bit they are talking in an opposite way. That's very important. If this were to happen, the auditor could be sued by the intended users. Discipline action could be taken by the professional body such as ACCA, and the firm could damage its reputation. This is the audit risk. What is the audit risk? You are not satisfied with the financial opinion. You are giving an inappropriate opinion. What is the audit risk? Audit risk is that if you are giving a wrong opinion, then the people intended you. Who are the intended users? intended users are the shareholders. Now we have covered, there is a three-party agreement. Who are the three-party agreement? You have an intended user, you have the practitioner, and you have the responsibility party. To avoid these damages, okay, what the auditor will plan and perform the audit in such a way that the audit risk is reduced to an acceptable low level. To avoid this, what you are planning, you have make that it is, we are not going to make, they say that it is acceptable low level. Okay, it is acceptable. What are the things audit risk? Audit risk is the risk of material misstatement and the deduction risk. One question, I told you 12 to 15 marks. That much weightage will be there. Plan it, we will have more easiest way. What is the audit risk? See, when you are doing the audit, okay, there will be a risk of material misstatement, okay. You will, something will be there inherent, inbuilt. You cannot avoid it, okay, inherent. It will be there in the organization. Some risk will be there where you will not have any controls. Is it? What are the things? You have inherent risk. You don't have sufficient controls, control risk. This is the 1 and this is the 2. Is it? This is the 1 and this is the 2. What is the audit risk? Audit risk consists of inherent risk, control risk, and more importantly, it is the deduction risk. You are not detecting. Why you are not? We cannot detect. Definitely. See what happens. Auditor will have 1,000 transactions. Assume, take an example. How much you will take? You will take a 5% sample. Based on the sample, is it right? You are based on sample. What you are doing? You are giving an opinion. Is it right? This is what it says. What is the audit risk? It is the risk of material misstatements. Inherent risk, control risk, and detection. What is the detection risk? You have a sampling risk and you have a non-sampling risk. Sometimes you will not take the sample. Okay? In general, in specific, audit risk was the inherent risk, the first one, multiplied by control risk, multiplied by detection risk. If you put all the things into consideration, you can put it as a audit risk. Okay, you can put it as audit risk. This is the tutorial note. I am leaving this. Keep it in mind. When I'm telling you that it has to be read means you have to read. There's no other option. Now, what is the risk of material misstatement? Is a risk that financial statements are materially misstated before the audit. Materially misstated, okay? Maybe in terms of policies, maybe in terms of calculations, maybe in terms of evidences, okay? Maybe in terms of evidences, maybe in terms of the rules, okay? Maybe in terms of the standards. You don't know, okay? You don't know. Somewhere it has been made away. What is it? Because of what? Maybe it is a fraud or it is an error. There will be both the cases. This is due to the fraud or error during the year when transactions has been processed or when the material financial statements are prepared. Slowly and understand. Visit it. What you are doing. We are talking about the. This is the heart of. I can say I will put like this. Okay. When you do the things, just to make you understand. This is the heart of this paper. Now you can understand how important it is. It is like how important. This will influence. Okay. This will influence the results. Okay, now another most important standard 315. What is the 315? Identifying and assessing the risk of material misstatement. This much you should write. You should not write all para 11, no. Audit ISA 315, identifying, assessing the risk of material. What is that? Understand the things. You understand with meaning. What is the objective of the audit? I am putting here again the star. Okay, I am putting lot of stars I will put. Okay, what is the objective of the auditor is to identify. What is our objective? Our objective is to identify and assess. That's what we are doing. We are doing nothing. We are identifying, assess the risk of material misstatement. Whether it has been done by fraud or it has been done by error. Is it? Memorize these statements. When you are memorizing, maybe I'm not saying that word to word, but when you are writing, don't change the meaning. Very important. Okay? This where we are using this, I will tell you, this we will use in section B. Okay, this if you are writing this, this will be the difference between more than 50 and less than 50. Is it? Yeah. I will give you. I have shared the all ISS with you. Okay, and I will give you more importance whenever it is needed. What is that? What is our job? The objective of the auditor is to identify, assess the risk of material misstatement, whether it is due to fraud or error, with respect to financial statement at the assertion level, basic level. We will when you are asserting whether it is happening or not. I will come back to this word in detail in some next chapter 6, 7 and 8. Okay, 6, 7 and 8. Is it? Now, he has provided that designing and implementing responses to be assessed risk of material mistake. Little bit difficult. I am telling you, little bit difficult too, but the more you read, the more you understand, it makes things simple. The objective is to identify and assess risk of the material misstatements, whether it is due to fraud or error. Financial statements at assertion level. Why? We are providing a basis for designing and implement. We are talking about the response. You are going to that audit, you have to design and implement response to the assessed risk of material mistake. Now, is it fine? This they will not give you. Okay, understand what? This they will not give you. Don't say that this. But I'm telling you, what is misstatement? A difference between the reported amount, classification, and presentation and disclosure. A difference is that you are talking about. Actually, you have the invoice. Okay, you have the invoice of 500 riyals. Now you are saying classification is important. What is the classification? Whether it is an assets, you have to make it very clear whether it is a non-current asset or whether it is a current asset. You have to be very clear. That's the classification where we are saying that when it is a income, okay, when it is a income, it is a regular income or it is a other comprehensive income, OCI. We are talking about the expenses. This is what the classification is there. When you are saying it is an expenses, it is either it is a research expenses or it is a development. If it is a research expenses, it should be in the profit and loss account. If it is a development expenses, it should be capitalized. This is the basic. The most classification, if you take into consideration, now you see the thing. it is like a debit and credit. If you change the debit to credit, credit to debit, everything will go wrong. Is it? This is what it says. The difference between the reported amount, classification, presentation or disclosure with respect to what? With respect to the financial statement. And the amount, classification, presentation, that has to be in accordance with the financial reporting framework. What the amount we have been presented and what the amount is actually, that is the misstatement. Is it what is the actual and what as per the rules? Misstatements can be done because of the error or because of the fraud. Okay, say understand, this will not be, I am telling you, this will not be there, but you have to understand what is the misstatement. Misstatement is what we are presenting and what we have to be as per the rules. That is the difference in that is a misstatement, material misstatement. You understand this concept, you understand 20% of the entire course. Now, what it says, when you are conducting the audit, okay, when conducting assessment, auditors are able, you are identify areas. You are what you are doing. You are doing an audit. If you are working in an audit firm or you are interacting with the auditors, you are talking about the same thing. We are identifying the areas financial statement where there is a misstatements are likely to occur. That's what we are doing. Is it right? We'll ask why you have shown 500, why it is only 400. Invoices, we are raising the invoice. We are raising the invoice of 500, but actually you are receiving the amount. Actual amount is how much? Actual amount is 490. We will ask what is the difference. Is that we are seeing that? We are saying that first what will happen? That is the. We are raising the invoice 500, we receive the amount 490, whereas in the bank statement, the amount is going to be 480. What the auditor will do? Auditor will go with the sequence, as simple as that. We are not doing anything. We will say that yes, you have sent an invoice for 500, subsequently 500 has to be there. You are from the top to bottom. By the time you reach end, it should be 500 only. If anything plus or minus, you have to know the reasons. This is what it says. Now, what is the problem? What is the issue? Why students find difficult? You have to follow the sequence precisely from one stage to another. In the end, what you will do? You will do reconciliation. You will do reconciliation. That is where we are talking about. Identify areas of financial statement where misstatements are likely to occur. Plan, you have to plan procedures that address the where there you find significant risk. Where you find risk is high, potential areas of risk. Carry out efficient, focused and effective audit. More important, when you do the things, what you will do? You see, your responsibility will be less by the time you do this process. You are reducing the risk by issuing. You are reducing the risk by issuing a inappropriate audit opinion. You are reducing the risk. You are saying that this is not as per the requirement. You will identify and you will make a presentation, and because of this, your risk, minimize the risk of your reputation and your punitive damage, any negative impact. Is it? Now you make it a point. I'm putting it in another color. In conducting through the assessment of the risk, auditors will do this. What they are doing? They identify the financial statements and misstatements because occur early in the audit. They will plan procedures to reduce the risk. They carry it efficient, focused and effective. Reduce in the risk by issuing inappropriate opinion, and we are not going to have any damage of goodwill or reputation. Are you clear about this?
Yes.
Yes.
Okay. Now, what are the different categories? I will mention where are the points to be understood, where are the points to be assessed in the examination. There are 3 categories of misstatements. This they will ask you in MCQ. What they will not ask you direct question. They will ask you, they will give you a statement and they will ask you what are these. The first one is factual misstatements. What is the factual misstatement? There is no doubt. It is wrong means it is wrong. There is no, you don't have, means you know this is the wrong one. The second one is judgmental misstatements. You are making a misjudgment, your judgment assumptions is wrong. The difference in accounting estimates, auditor consider unreasonable, or the selection of application of wrong policy. You are making a judgmental fact. The third one is what? Projected misstatements. Means what you are doing, your estimates, auditor estimates is not matching. The projected misstatement, the auditor best estimate of the misstatement in the population through projections of misstatement identified in a sample. Is it factual information is, remember this, factual information, you don't have any doubt. It is factual, debit to credit or credit to debit. Judgmental misstatements, your assumptions are wrong. Projected means your estimates are wrong. Is it? Projected means of the auditor, best estimate. You will say, yes, this is the how much you are going to identify. 3 types of misstatements are there. They will ask which one is the projected, which one is judgmental. 1 or 2 questions are there in our revision kit. Okay, now, fine. Now we are going to start the actual. What are the 3 components? See, we are putting like this, AR, audit risk. Audit risk is what we will put like this. It is inherent risk, it is a control risk, and it is a deduction risk. This much you put it. Yeah, you work very smart. That's very, you should not work hard. You have to work very smart. Audit risk. Okay, what is the inherent risk? What does it mean? Tell me, anybody? Inherent risk. See, I will come to this. A complex accounting treatment is an example of an inherent risk. Complex accounting treatment, Islamic banking, a complex one. Is it a taxation? VAT is a complex one. Automobile, if you take airline industry, a complex one. Every industry have it a very complicated. Is that you will have the inherent risk, okay? We find it very difficult to identify. You have to be specialized in this. Inherent risk is what? Is that for example, first read the example, then we'll come to the definition. Accounting strong standards provide guidance on a specific accounting treatment. This not be understood by the client. Standard says one thing, but the accountant doesn't understand that. Is that very complex if you take into consideration? I will come back to this. You have IFRS 15. IFRS 15 says that you have a 5 steps process. Okay, you have a 5 steps process. I will write. You should have a contract. Is that you should have a contract? You should have an obligation. Is it? you have you have a performance, okay, you have a performance, you have a allocation, okay, you have a allocation, and you have a recognition. 5 steps you should follow. When you do a sales audit, you should follow the thing. Is that when you are doing an inventory audit, you have to follow IES 2. Lower of, okay, lower of, okay, lower of the cost or net realizable value. You should understand, without knowing the standards, we cannot do the audit. Is right? Now, this is what it says, is the example. Now come back to inherent risk is the successability at the of an assertion. What is that? Valuation. Is that completeness? Is that assertions are it is complete, it is valuated. Is that you have a completeness is one of the assertion from beginning till the end about a class of transaction, balance, disclosure to misstatements that could be material. Means whenever you do the things, you have to start. See, this is what it says. Whenever you are doing the audit, you should pass through different stages. From the beginning till the end. Is it till the end? From debits, credits, from till the reconciliation. I am giving you this. I am repeatedly again. From what? From the debit and credit until the reconciliation. Is that till the reconciliation? It has to be perfect, 100%. That's all. If you are not understanding this, if it is a complex transaction and it is some rules are saying something and you are doing something, then it is a inherent risk, inbuilt risk. Isn't it? If your rules are saying something and accountant is doing something, it is a inherent risk. As simple as that. Inherent risk arise nature of industry. Hospitals, concept is different. You cannot say banking, concept is different. Hospitals audit, concept is different. Hotel industry, concept is different. Every industry will have a different way of operations. Due to nature of industry, entity, or a nature of balance itself. Take the for example, inventory is inherent risk if it becomes quickly obsolete. Inventory is there. Vegetables, very simple. Hypermarkets, okay? If you take the hypermarkets, big hypermarkets, I'm not, because they are talking about the inventory, they are talking about it becomes obsolete, okay? It becomes quickly obsolete. Vegetables. You'd think that hypermarket, they don't have audit, they have the audit. They will purchase, they will sell. Is that inventory is inherent risky if it becomes quickly obsolete. I will give another one. You have dairy industry. You have milk. Is that you have Al Rawabi is there, Al Mara is there, Mazun is there. You have so many things. Now, what are they? Milk, how many days are they? They will have a expiry. They have a 5 days validity will be there. Immediately it will expire. People are there. They will do all the time what is the packing date and what is the expiry date. Understand the subject with examples. You will have more clarity. You will not need to do anything. Is it for inventory? Is it risky? It may not be valued appropriately. It may not be at the lowest. See what is the method I said? Whenever you are talking about the inventory, lower of cost or NRV. People doesn't know how to value the inventory, then it is a inherent risk. Inherent risk factors are qualitative or quantitative. Complexity, very, very difficult things. Okay, complexity. You take any industry, you take automobile industry, you take milk industry, you take cement industry, you take Oman flour mills. Is it? You have the complexity, subjectivity, based on the content, how you have to deal with. It will change. There is a lot of uncertainty. You have a susceptibility to misstatements due to management bias. Every management, see, the people will argue. That is why people will argue. Management will say that we have done like this. Definitely, you have to what? Means inherent risk is, it is in simple words, it is a risk with respect to the rules, what the rules are saying and what we are doing. If two things are not matching, then it is a concept of inherent risk. What is that how it is going to be reflected? Are you clear about this?
Yes, sir.
Okay?
Yes, sir.
Now, what are there? They give the examples. Property, plant, equipment. You will overstate the expenditure on repairs. People will do. You will overstate the life of the assets. Instead of 5 years, you will take 10 years. You will overstate if assets are ordered but not delivered on the reporting date. These are examples. Keep it in mind. Examples make things very, very easy for us. Understating any expenditure. You can see people are there who will overstate the price, who will understate the price. If you will say that instead of 5 years, they will put 10 years. Instead of 5 years, they will put 2 years. Everything can happen. Is it? Now, provision for liabilities. You have overstate. There is no obligation, but you will create an obligation. Fine. You are saying that provision for losses. I will put provision for losses as 5%. You will put a provision losses for 7%. Yeah, as per IS 37, is it right? As per IS 37, provisions, contingent assets, contingent liabilities. What can do? Your assumptions are different, my assumptions are different. Overstated, if not probable that payment will be made. You will create a provision, unnecessary provision we are creating. Okay? See, sir, it is a provision because what they say, we have a concept called as a prudence. Is it? Prudence is the concept. We have to be cautious. Is it? You should not overestimate. Okay? Understate. You can understate any estimates. You can overstate or you can do anything. Okay? You as a accountant, as a finance manager, you can do. What they say, you have to be professional skepticism. Always you should ask questions. That is the reason whenever auditors will come, auditors will ask lot of questions for us. Why you have done this? Why you have done this? Okay, now these are the things. They are intangible assets. Another area, gray area, doubtful area, overstate. If see research cost, research cost always has to be expensed. You cannot capitalize. Overstate if research cost have been capitalized rather than expensed. Always expense. Development cost capitalized. Amortization. Is it right? Amortization. Is it right? Amortization. Amortization of what? Amortization overstate if amortization has not been charged on. What do you mean by amortization? Anybody knows?
It is similar to what you call depreciation, but for intangible assets.
Is it right? Reducing the value systematically. I will put both the things. There is a impairment is there is a for intangible assets. Okay, if it is a finite life. Finite means the life is 5 years, 10 years. Then you use amortization. if there is a infinite life, no life, is that forever, infinite life, okay, infinite life, then we use impairment. Is that you should know, use impairment. Now you should know whether it is amortization or it is impairment. Both are completely different concepts, okay? Completely. Understand if development cost has been expensed rather than capitalized. See, what I said is beginning, research cost should be expensed. Development cost should be capitalized. This is the rule. If you are not following the rule, then it is called as an inherent risk. Is right? If you are not following the rules, then it is called as a Now you understand inherent risk is classification. Is that you are wrongly classifying. That means you don't know the rules and you are doing. That is the reason. Now what they say, the people, government, what the government is saying, that you have to have an accountant who has the accounting qualification. When they say you should have an accountant with accounting qualification, you should try to avoid inherent risk. Now you understand what is the rules are there and what we are expecting. This is the first one. Are you clear about this?
Yes.
Now, what is the control? Now nothing is there. Now you have understood the concept, is it right? Control risk is the statement that occurs that could be material, will not be prevented or detected or corrected on a timely basis. You don't have controls. Okay, you don't have controls. If you don't have controls, very simple. What they are doing, whenever you're preparing any order, okay, invoice is there. One person will prepare. Okay, one person will verify. One person will approve. This is what you are doing, you are putting controls. Is it? Yeah. One person will receive cash and another person will deposit cash and another person will do reconciliation. Separately. One person should not do two tasks. In simple words, they are the controls. Okay, what the control will say? This is the client should have control in place. What are the controls? One person will have authorization. Is that one authorization? Is that you should have who is authorizing? Segregation of duties. The different people should do. You have to do reconciliations, and you should have a physical controls. Identity card is there. Everybody now is this biometric presentation, face recognition. Now the things are moving very fast. That is what they control risk. Means unauthorized person should not enter the premises. It is the control risk. Assume you don't have a biometric entry. Okay, you don't have biometric systems. What will happen? Everybody will do. Is it? You don't have face recognition. Everybody will do. Is it? You have a controls. You take the banks. You take the bank. Only if you have only authorized person can take the bank statements. I cannot ask a bank statement of my friend. It is a control risk. It is a control risk. That's what I say. You should have authorization, segregation, reconciliation, and most physical control. Why we are doing? We are want to prevent and detect any misstatements. That's all. Okay, understand. Very interesting, very simple, very, very important. Is it? Now, when transactions are initiated, processed, and recorded. You are swiping a product, okay? You are swiping a product. Automatically it is controlled. If there is no barcode reader, You should have a registered barcode reader. Then only the product can be scanned. If there is no, if sometimes what will happen, they will scan, but something is missing, number is missing, it will not get scanned. Only the products which has been purchased, those has to be sold. That is the control risk. If effective controls are in place, control system will either it will prevent the misstatements, no errors, or it will detect misstatements. If every controls are in place, if your controls are in place, it will prevent and it will detect. If controls are not effective, control risk will increase and there will be a greater risk of material misstatements. We will cover in detail systems and controls. Okay, we'll cover in there. Now you understand what is the control risk in terms of authorization. Is that in terms of authorization? Put the things here. In terms of authorization, segregation of duties. In the examination, in one of the questions, you have to mention this. Segregation of duties is very important. Fine. This is the inherent risk is as per the rules, and what you have presented is not matching. The accountant is not following the rules and regulation. Where is the control risk? You don't have the controls in place. Authorization, segregation of duties, reconciliation. Because of that, you cannot prevent the errors. The last one, it is the detection risk. What is the risk that whatever the procedures are performed by the auditor, the detection is the risk that the procedures performed by the auditor to reduce the risk to an acceptable low level will not detect. You cannot detect what are the mistakes. Detection you cannot identify. That is the detection risk. Okay, you cannot. What are the things? The detection risk arises from where? It arises from the sampling. See, I told you, you have so many transactions. You have millions of transactions. The external auditor cannot work on this, all the transactions. What the external auditor, they will identify a sample. And they will say, they cannot say that I will verify, I will verify evidence of each and everything. No, you can do only a part, you cannot do it completely. Is that why? What is the reasons of detection risk? It is a sample. Sampling is the risk that the auditor's conclusion based on a sample. Is that you are going to say that, is that if you are doing this, here you will say that there will be error. Okay, there will be error. The error will be 5%. Is it, if you have taken something more, assume if you have taken something more, some more samples. Okay, you have taken some more samples is there. Okay, you have taken some more samples will be there. There will be a possibility. Is that you are increasing the sample size. There will be possibility that the error will be 3% or the error will be 7%. Based on this, is that right? Based on this, what you are doing, you are giving your opinion. If you can have increase your sample or you can decrease the sample. That is what it says. Is the risk that the auditor conclusion based on the sample is different from the conclusion that has been reached if the whole population was tested. If you are testing whole everything, maybe there will be more or there will be less. Sample was not representative of the population. You cannot say that, yes, I have taken the sample. That is the reason. You cannot say that I have taken the sample and based on the sample. If you taken more, things will be different. That is the reason what the auditor will say. Auditor will say true and fair. If you take completely, then you can say correct or incorrect. Okay, this is the sampling risk. We will cover this on sample, only on sample. You will have 2 questions, 4 marks. Only on sample. What is the non-sampling risk? That the risk that the auditor conclusion is inappropriate. You are not based on, you are just making an assumption. Application of, you are not following the procedures, inappropriate procedures. You have failure to recognize a misstatement. Sampling risk means if you have taken more sample, you would have been more accurate. Non-sampling means you are coming to a conclusion with an inappropriate solution, inappropriate procedures. You are not following the procedure. Maybe you will, in some cases, you will have sampling risk, or in some cases, you will have non-sampling. They will ask 1 question on this, 2 questions, 4 marks. Okay, they gave you some more reasons for that. The auditors must amend. The moment you find errors, okay, you see the thing. Now, first you will say that how much will be the difference. You will say, you will plan, and you will say that when you plan that there will be a 5% material misstatements. Yeah, misstatements, okay, mistake. You plan at the beginning. Now you are doing completion, okay, in the process. I will not say completion. In the process, you find that material misstatement is 7%. How much sample you have taken? You have taken a sample of 5% of population. Anywhere, any doubt you ask. This is called as a population. The entire thing is called as a population, and this is called as a sample. Now, you have, how much is there? This is your material mistake, 5%. But when you do it, 7%. How much you are there? Now, what the auditor will do? Auditor will increase the sample size. Is it? Auditor will increase the sample. Auditor will say that the sample size will be 9%. I am taking an example. If you take the 9%, what will happen? The material misstatement. Is that the material misstatement? Is that the material misstatement? Either it will increase or it will decrease. You are increasing the sample, you will verify more items. The moment there are more mistakes are there, what you will do? You will see that there is the similar way other things has been done. Then you will get a doubt. When you get a doubt, you will verify more transactions. Why we are doing this? Because you are reducing the risk. Take my word. You are reducing the risk to the acceptable low level. Is that you are reducing the risk to the acceptable low level? Okay, read this once. Tomorrow before we start, read this. I will take little bit more in detail. There can be what the auditor must amend, must change the approach with respect to assessments to ensure that they detect the material misstatements. The moment you think that there is some doubt is there, mistakes are more, you have to change your plan, change your approach. What you are doing, you will be more professional skepticism, you will be more questioning mind, you will assign more experienced staff. You will expand. You will change the nature, timing and extent of direction. Your supervision will be more. Because you are finding more errors. You are finding more errors. Then automatically you cannot continue. What you will do, you appoint more experienced staff. Is that you will be you more questionable mind. You will put more supervision. Is that you will incorporate additional elements of unpredictability. Is that you will change the overall strategy. Automatically, the moment you are finding the errors, you will change your strategy. Okay, your auditor determination of performance. You have to be more focused. Okay, performance materiality. Auditor plans to test the effectiveness of controls, whether the controls are effective or not. Okay, whether the controls were preparation. See, there will be some gap will be there. Because of that gap, there will be some errors, mistakes will be there. You will try to identify the controls, whether controls are effective. And we will do what? We will do the substantive procedures, detailed procedures. We will cover this in lecture 8. The moment you have, see, very simple, very easy, understand, you are going to an audit, you are doing the audit, and when you find there are some errors, then in your mind, your doubt will be increased. Then you will think, you will do something more, experience, maybe you cannot say that the client is wrong, maybe our approach is wrong. Then you will find more experienced people. Then they will make a procedures. Is it? Then we will say that how things are moving. This is where we have the moment there is a percentage increase, then you will change the strategy. You will have a professional skepticism. Attitude includes a questioning mind. You will be very alert to conditions. There will be any possible misstatements due to fraud and error. Is it? You will become alert to conditions. What is the professional skepticism? You become alert to conditions, and you will try to make a critical assessments. Okay, you try to make a critical assessments. Okay, now automatically they require the audit team to have a good knowledge of client activities or financial statement. The audit team should discuss these matters in the planning meeting. Is it which work is done by whom? Is it read the things? I'm little bit quick here, but you read the thing. Professional skepticism is necessary for critical assessments. Specialist, is that as a matter of fact, first you will go for a general physician, then you will go for a specialist. Okay, you will go, then automatically you are talking about the specialized experienced people. You want to reduce the risk to the acceptable level. Professional skepticism is an attitude that applied by the auditor when making the judgments. Is that when making the judgments? Are you clear about this? This is what you will have a questioning mind. You are bit alert with respect to possible misstatements due to fraud or error. How to apply professional skepticism? Is that you see, require to be alert. Audit evidence will not match with other evidence, audit evidence. One evidence is not matching with other evidence. Invoice is not matching. See, that's the reason. Is that invoice amount is different? Is that invoice amount is different? Invoice amount is 500. Amount received is how much? Amount received is 400. Deposit is how much? See, the deposit is 450. It happens, okay? That is the reason. What we are doing, in that case, what we will do, we will do the substantive procedures, detailed procedures. Most of the students find this difficult. I will tell you very clearly where you have to be very cautious, where we have to be improved, where we have to be focused. Yeah, one evidence is not matching with other evidence. Information that brings into question the reliability of documents. Is it? What is the reliability? Whether it is approved, whether it is signed, whether it is verified, whether it is reconciled. Is it? Whether reliability of the documents. When we are talking about the what we'll ask, we ask what are the return communication. Okay, return communication is there or not. If it is in, sometimes orally will be there, will not be acceptable. If it is given by internal or it is given by external. Is it? If it is given by external, it is more reliable. If it is given by internal, it is less reliable. Is it? These are the things that cop up with you, professional skepticism. Conditions may indicate there is a possible fraud is there. You will get in doubt. Is it? And it happens. Is it that? It happens. In most of the cases, in some, it happens. There will be you will have a doubt. Circumstance suggests that need for audit procedures in addition required by ISA. Is that need for a audit procedure? Audit procedures, you will have one question for 10 marks. Not here, in other chapter. Substantive procedures, you will have 10 marks. Audit procedures, you have 10 marks. Procedures means as simple as that. Sequence wise you have to do. Is that sequence wise we have to do. They are talking about the things, okay? They are talking about the things as such, okay? See the thing, read. You will understand. I am reading. A customer of a client have financial difficulties, not paid invoices for 6 months. Credit terms are 10 days. The auditor asked FD, financial director, about the outstanding debt, whether it should be written off. The financial FD has informed the auditor they believe the debt will be paid as they have never experienced in recoverable debts. Here they are talking about that they have not paid for the 6 months. The auditor has questioned the finance director. This finance director said that it will be paid. Previously they have not have any default. To exercise skepticism, the auditor will seek an alternative. Corroborative evidence to support claim, whether finance director is saying right or wrong, as they may not want to make allowance for debt because they don't want to make a provision. And because if you make a provision, what will happen? Your profits will be reduced. Is it? From your, what will do? You will have a provision. If you are making a provision, what will happen? Your profits will be reduced. They don't want to reduce the profits. The auditor could review bank statements post-year to identify payment has been made. What the auditor will do? Auditor will see the history and could review any correspondence between the customer and the client when payment might be made. What they will do? They will see what the past history. Okay, they will see the past history. One, they will see any communication is there with the client. Their procedures provide more reliable. If you do this, they will provide more reliable evidence with the management, who may tell auditor what they think that auditor wants to hear to avoid an adjustment in the finance. Means what you will do, you will not, I am not saying that we are not going to trust, we will trust, but we will see the evidence, whether they have defaulted previously. Is that there is any communication with the client? Is that there is an obtaining? What they will do? They will not believe. They ask you to give in writing from management. Is that is only marginable because management is internal. Client generated evidence is always the least reliable. If it is coming from the management, it is less reliable. And the auditor always look for a better quality evidence where possible due to risk of management bias. This you understand, you can answer 10 marks question very easily. Means when there is a doubt, what you will do? You will see the previous year. you will communicate with the client. Any communication is there. You will ask for a written representation from the management. Here you will ask for the written representation from the management. You want things has to be news. You are not working on one evidence. You are working for a multiple evidence to reduce the risk. Understand this. It will give you a good. If you understand this, my task is easy. Your approach will be very easy. People should understand this. You should not say that I am giving one evidence and the students will say that yes, I have written good. No, you have to give multiple reasons. This much you have to write. We are not going to write about anything in detail. First one, example 2. An audit client is being sued by ex-employee for unfair dismissal. The finance director tells the auditor that the company lawyer believes it is probable that employee claim will not succeed. A audit client of a suit, they have put a legal case against the employee. Is that audit client is sued by an ex-employee has filed a case. The finance director says that the auditor, that the lawyer believes that it will not succeed. As a result, no provision has been recognized. Now what the auditor will do, that is very important. Auditor, the exercise skepticism, the auditor will review the correspondence between lawyer, confirm, we will check we will see what is the correspondence with the lawyer. More reliable evidence will be obtained if the auditor obtain a direct communication from the lawyer. Direct communication is that will not you communicate directly, but you have to get the permission from the client. The confirming the position as evidence would not obtain via the client. This is the first one, is that you will review the correspondence. The second one, you will get a direct communication with the lawyer. Then your confidence will increase. You are reducing the risk as such. Are you clear about this?
Yes.
Okay.